Hi, I'm Jimmy. In this video, we're looking at Royal Caribbean Cruises, ticker symbol RCL. The goal of this video is to better understand the basics of their business, what they're doing to try to avoid bankruptcy as the whole coronavirus is shutting everything down, and then perhaps see if we could try to gauge where the stock could go over the next couple of years. Okay, so let's start with the basics of Royal Caribbean's business. So Royal Caribbean is the second largest cruise company in the world. Only Carnival Cruise is larger than they are. And over the past few years, Royal Caribbean has been able to gradually grow their business. This is the number of ships that Royal Caribbean has had in service going back to 2012. And if we're curious, we can get this information straight out of their annual reports. So, as of the end of 2019, Royal Caribbean has 61 ships in service. Now, I was curious how this compared to some of the other big players in the industry, so I pulled down the same information for both Carnival Cruise and Norwegian Cruise. And like I mentioned before, we can see that Carnival Cruise is the largest with about 105 ships as of the end of 2019. They're the ones in the blue bars. And Norwegian is the smallest of the three with 27 ships in service. They're the ones in the gray bars. And I'm sure it's obvious to all of us that there would be a direct correlation between the number of ships in service and the amount of revenue generated by each of those shipping companies or each of those cruise companies. And there's a few different things that jump out to me about this particular chart. First, the past few years have looked pretty good overall for the cruise industry, or at least for the revenue of the cruise industry. And the next thing that jumped out to me is it seems that like Norwegian Cruise seems to have a lot of revenue relative to Royal Caribbean in 2019, especially when we compare it to the number of ships that they had. In fact, Norwegian had 27 ships in service as of the end of the year, and Royal Caribbean had 61 ships. So Norwegian has less than half of the ships of Royal Caribbean, yet they generated almost 60% of the revenue of Royal Caribbean. So this might be an interesting company to dive deeper into. So if you'd be curious to see a deeper dive into Norwegian, please let me know in the comments below. But for now, it just may be best for us to acknowledge that the industry was doing quite well leading into 2020. But then, of course, the coronavirus hit. And just a few days ago, the CDC came out and extended the no sail order to the tail end of July. And clearly, this is going to destroy the entire industry's revenue. Now, this brings us to Royal Caribbean's ability to stay in business while they're not running any cruises. And when we look at their cash position, well, we can see that they had slightly less than $250 million in cash as of the end of 2019. But obviously, a lot has happened since then. So Royal Caribbean was able to secure about $2.2 billion in a secured credit facility, which is basically the same thing as a line of credit. So that, and then they had some cash on hand, and then they took out a few other pieces of debt, and they had some cash that they had taken in from potential cruises down the line. Overall, it's estimated that they have about $3.3 billion in cash right now, either in cash or cash available to them. So now if we add debt to this cash chart, well, we can see that they have a ton of debt relative to the amount of cash that they have, at least through the end of 2019. And we know that they upped their debt by at least $2.2 billion, and their cash should be somewhere near this green line here. So I suppose it's a bit better cash relative to overall debt, but I still think that they're going to have to deal with this debt. One of the things Royal Caribbean has announced to help deal with the debt, at least in the short term, is that they were granted a debt holiday in Europe. I believe it was in Germany. So basically what this means for them is that for at least a piece of their debt, they're not going to have to pay any more principal, only interest. And it seems that this should free up about $200 million in liquidity throughout the year, according to some of their filings. Now, just so we're on the same page, this debt that they're essentially getting a debt holiday from is not debt that you might typically think of where they issue bonds or something like that. It's debt related to the purchasing of some of the ships that they have. Ships like the Spectrum of the Sea ship and the Anthem of the Sea ship. Now they just have to pay off the interest on the loans that they took out to buy those ships. So that should help. It should reduce, like I said, $200 million in freed up liquidity over the course of the year. That should be a good thing. They're also trying to get a few more ships grouped into this debt holiday that is backed by the same institution that allowed these to happen. If that happens, they claim that should free up about another $300 million in liquidity. Now, it makes sense that cruise companies are going to countries and institutions outside of the United States for help, since it's been made clear that no bailout money is going to go to cruise companies, since most of them aren't US companies. And I believe that since Royal Caribbean isn't a US company, the Federal Reserve isn't eligible to be buying their debt, since the Fed has announced that they're going to be buying a whole bunch of companies' debt. So that doesn't help them too much either. And if we're curious, this is the rating scale for the three major rating agencies. And one key thing is Royal Caribbean doesn't want to fall down too far and make their debt more expensive. The red line represents investment grade. Anything above it is investment grade, and anything below it is not. Obviously, the very best companies fall into the top tier, the AAA tier. Royal Caribbean has a long-term credit rating of Baa3 with Moody's, a BB rating with S&P, and I could not find a Fitch rating. So obviously they're trying to secure as much cash and ensure that they can stay in business as long as possible to prevent these ratings from dropping down too far. Now, I haven't found how much it costs for Royal Caribbean to run their business while the ships are idle. Estimates I've read imply that it's going to be somewhere in the $350 million range. Those estimates were in before they cut the deal with the European creditors. So I would expect for that number to drop at least a bit. Now, this $350 million number isn't as clear as when I did my analysis on Carnival Cruise, since Carnival Cruise came out and said in their annual report that it cost them $1 billion a month to run while they're idle. Now, I haven't seen the same transparency from Royal Caribbean, but like I said, analyst estimates have them at about $350 million, minus what they're saving on their debt. So I think this is a reasonable number for us to lean on for now. So with the $3.6 billion in available cash and the cost-cutting measures at a minimum from the debt relief, well, it seems that Royal Caribbean can survive for 10 months, maybe a year, assuming they don't raise any more capital. So our question is now, is that enough to avoid bankruptcy? And personally, I think that it may be. They may still file for bankruptcy because that may help them get out of some of their current contracts and may help with their overall situation, but I'm not sure they have to. How long does this coronavirus last is going to be one of the key questions. If they can get back on the seas, let's say by the end of summer, well, I think that their stock price could move to more normal levels. And once earnings per share catch up in, let's say, the next 2 years, maybe 3 years, I wouldn't be surprised if their stock returned towards the old highs, or maybe not the old highs, but the old range. Call it $80 to $100 range. Now, I do think it's tricky to come up with a fair value for this stock at this point because there are just so many unknowns. And their business is so heavily dependent on when the coronavirus ends, when they're allowed to start doing cruises again, and what happens with the overall economy. That's a key part of their overall business. Now, I actually did a video recently called, Should I Invest Now or Wait for the Stock Market to Crash Even More? And in that video, I walked through some key economic indicators to try to get a gauge of where the overall economy seems to be right now. This wasn't that long. It was just a week or two ago. If you're curious, perhaps that could be a good next video for you to watch. There's a link right here. There's a link in the description below. And thank you so much for sticking with me all the way into the video. I really appreciate it. Thanks, and I'll see you in the next video.